I'm your host, Katie Talati, Director of Research at Arca. For those joining for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, we're going to share with you some notable token price movements and what we think drove those moves. As a reminder, before we get started, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, so there's been a lot going on this week. Most of it obviously is kind of revolved around FTX, potential fallout that's been impacting Genesis, Digital Currency Group or DCG, and others such as Gemini, FalconX. It just seems that every day there's kind of a potential new impact from the FTX issue. But we're going to not actually spend too much time talking about that today. I've got some other tokens for you guys. So first up is Synapse. So for those who don't know, Synapse is a layer 2 scaling and bridging solution. They established a bridge this week to Canto, which is a Cosmos-based DeFi-focused L1. Canto or Canto has actually kind of made a lot of headlines recently. They've kind of launched as being more geared towards being a public good instead of having a token for each individual aspect of their blockchain. So this marks Synapse's 18th bridge connection and their first connection to a Cosmos-based chain, which should bring more liquidity and assets to the Canto ecosystem. So if you're not as familiar on bridges, basically, or at least the Cosmos ecosystem is like pretty, even though it's meant to be a bit kind of like an interoperability blockchain, because of the way it's designed and because of the fact that it's kind of on the newer side, it's really tough for a lot of the alt L1s to bridge over to it in different aspects. So it's not as easy to send assets over. And actually right now, the Cosmos ecosystem doesn't have a universal stablecoin because its universal stablecoin used to be UST or US Terra stablecoin. So they're actually launching USDC early next year, which should be really great for them. But right now, there's not a ton of liquidity over into that ecosystem. So hopefully this will, help increase assets. To give you a picture of that, Synapse currently ranks 8th in bridge volume, with monthly volume sitting around 230.92 million, while Canto has about 65.8 million in TVL. So good thing to watch those numbers as they go up. Despite this kind of positive development for Synapse, they are down 8.4% for the week. All right, and now we come to Chainlink. Chainlink is a decentralized Oracle provider. And basically what that means is that blockchains have a hard time kind of talking to the outside world, obviously. And so they need certain inputs, especially for smart contracts, to kind of execute on their if-then statements. Just as a quick example, if say you have a contract that says, if the weather is sunny tomorrow, it will pay out Bob $5. The blockchain isn't necessarily going to know if it's sunny tomorrow. It needs to be reported from an outside source. However, if I'm the person who owes Bob $5, I might want to manipulate that data and say it's not sunny tomorrow, when in fact it is. And so oracles kind of provide truthful data connecting the outside world to the internal one, the most common being price points, price data. So, Chainlink is probably the biggest decentralized Oracle provider. They announced that December 6th is going to be the official date of staking for them. So the staking component on Chainlink's network has been long anticipated, as it means that data providers on the network must secure their data with staked link, which could face slashing if that data proves to be bad. The project also released details on pool design, alerting mechanism, auto delegation, staking rewards, and the reputation system. So this is kind of like a big piece in Chainlink's roadmap that's been long awaited. To date, Oracle data providers weren't really punished economically if they provided incorrect data. So this should really be interesting for that ecosystem, in addition to increasing the utility of the Link token. This was a pretty positive development coming out of a rough week. So Chainlink is up 9.3% on the week. All right, last up I got for you guys is Curve. So Curve is a stablecoin DEX. So all they trade is stablecoins. And basically, Curve released their stablecoin white paper yesterday. So this was another kind of like long anticipated product that they talked about. But the stablecoin product is pretty interesting. It's called Llama. It stands for Lending Liquidating AMM Algorithm. A reminder that most DEXs are AMM design, which is an automated market maker. So the Llama stablecoin is going to look to solve the issue between decentralized lending and trading protocols. To kind of expand on this, so since lending protocols can be manipulated if a user borrows using an illiquid asset, the protocol can get stuck with bad debt. So the idea being like, I might be able to loan to you an illiquid asset, and then you could I might loan out an illiquid asset to one of these decentralized protocols, and then I can go into the secondary market and buy a tiny bit of it, which would push the price up, essentially increasing your collateral amount, sell the loan that you have, and then you basically book that, the person who's doing that books that gain. And then the protocol, unfortunately, is stuck with bad debt because they now have this liquid asset that falls a ton in price and isn't worth what the borrow amount was. So to combat this, Llama would create a liquidity provider position, or what's called an LP token for short, for any user that wanted to borrow. Then as the position became under collateralized, basically, so like say that a liquid asset went down, the LP position would essentially automatically buy and sell the two assets in the LP position to rebalance the debt. So a few people have said that this is going to be really great in terms of kind of combating the issue between AMMs or DEXs and decentralized lending protocols, because that's kind of, like I said, a big issue right now that they're facing, is that they don't talk to each other. And so they don't know if, hey, somebody's messing with the price on one particular asset in order to take advantage on the lending protocol of that price discrepancy. And so they're kind of like trying to tie the two more closely together by having an LP position be on the DEX that would then kind of rebalance to help shift the bad debt around from just being on the lending protocol and much more on the borrower. So yeah, the stablecoin white paper has just been released, though. The product is not out yet. We'll see how this works in practice. But I'm excited to see it. It's very cool, very creative. Okay, guys, that's all I have for you this week. Thanks for joining. I hope you enjoyed our insights. Tune in here again next week at Wednesday, 1 p.m. Pacific, to hear what's driving token prices. For those of you in the United States, I wish you all a happy Thanksgiving and safe travels if you are going anywhere.